Sukuk versus bonds. First of all, I want to mention that Sukuk is a valuable instrument for raising money for businesses and the government. There's no reason why the United States should miss out on this opportunity. Introduction: the origin of Sukuk. Sukuk is derived from the word sak, which can mean legal instrument, deed, and check. Sak can also mean to strike a seal on a paper document. The first Sukuk transaction took place in Damascus, Syria, in the Great Mosque of Damascus in the 7th century AD. Sukuk versus bonds. A conventional bond is a contractual debt obligation whereby the issuer is contractually obliged to pay to bondholders on a certain specified date interest and principal. Under a Sukuk structure, the Sukuk holders each hold an undivided beneficial ownership interest in the underlying assets. Sukuk holders are entitled to a share in the revenues generated by the Sukuk assets. In sum, Sukuk are monetary denominated participation certificates of equal unit value to be issued to investors to represent their proportionate share in the ownership of the underlying assets and a pro rata share in the income generated by those assets. While bonds represent pure debt obligations from the issuer to the investors or bondholders, the Sukuk represent ownership of a well-defined asset. The sale of Sukuk, both in primary and secondary markets, is a sale of a share of an asset, while selling a bond is basically the sale of debt. In terms of pricing, Sukuk prices are market-driven and depend on the fluctuation of the market value of the underlying assets. In the case of the issuer's default, Sukuk holders will possess the asset and they can sell it to other buyers or keep it as an asset. On the other hand, bondholders depend solely on the creditworthiness of the issuer without any specific assets to be relied on. Therefore, in the case of the issuer's failure, unsecured bondholders will be jointly seeking the assets of a bankrupt company. The aim of bond traders usually is to make capital gains as fixed interest bond prices rise when variable market interest rates fall. Bond trading is therefore largely about exploiting interest rate developments and trading in paper that is usually unrelated to the value of any underlying asset. The major risk for holders of conventional bonds is of payments default, but this risk is usually assessed solely on the basis of credit ratings, with the ratings agency rather than the bond purchaser estimating the risk. Hence, the bonds are regarded as mere pieces of paper with third parties estimating the risk and the purchaser at best only making a risk-return calculation without any reference to the business being financed. Sukuk is an undivided ownership share in specific assets, while holding shares means holding an ownership share in a corporation or a company. In Sukuk, the assets should be Sharia compliant and a minimum of 51% are tangible assets. Ordinary shares do not require the company to be Sharia compliant, and the percentage of tangible assets is not determined. The end.